Hi, my name is Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Monday, July 14, and we're in the middle of the US session. Janet Yellen will be delivering her semi-annual testimony in front of Congress tomorrow, a two-day question and answer session that can provide some clues as to when the next rate hike will be from the Fed. Or not, if Yellen purposely remains unclear, which Bernanke was really good at doing. Let's take a look at some US dollar crosses, the pound dollar, Aussie dollar, and Kiwi dollar, which are in consolidation and might find some direction after the next couple of days. The pound dollar has been consolidating since the 2014 high at 1.7179. Last week, the Bank of England did not confirm a 2014 rate hike, but it is still on the table. As cable consolidates, its direction after the next couple of days will likely be based on the US dollar and not so much on the pound. If Yellen removes or lowers the possibility of a rate hike to be pushed back until after mid-2015, the US dollar can be resilient. In this scenario, which is hawkish, in this scenario, pound dollar might continue to consolidate in a larger scale, holding that 2014 high. So in this larger scale of consolidation, if you compare it to previous consolidation periods in 2014 and late 2013, you see that they have been about 1.5 months long and ranged about 300 to 350 pips. So if this is the case here, we should be looking at support around the 1.69 handle. That means we should be looking for a clear out of some recent support factors before expecting traders to buy up cable again. If Janet Yellen does hint at a pushback in the FOMC rate hike, then the pound dollar is likely to respect these support levels and the recent support levels, and should still look bullish. Okay, so for example, the 1.70 level was a support and resistance pivot, and we should look for that to give the market another level to enter back into the bullish continuation scenario. We should not expect the market to break below this rising trend line from June if Yellen's tone is dovish. Okay, so with a dovish tone, we should expect the market to respect this trend line. The Aussie dollar is consolidating as well after a new 2014 high around 0.95. It is coiling or in a triangle. I believe there is some bearish bias because of the failed bullish attempt last week that was rejected by the previous highs around 0.9440. At this point, a hold below 0.94 and a break below 0.9360 should confirm short-term bearish outlook. But the 0.9320 to 0.9340 area will represent key support. If the Aussie dollar breaks below 0.9320, then the next key level to monitor for support will be 0.92 to 0.9220, as you can see in the daily chart. However, after Yellen's two-day session, if price starts to trade north of 0.94 and pushes back above 0.9440, we should expect a bullish continuation to challenge the 0.95 high on the year, with upside risk above that toward this October 2013 high around 0.9756. The Kiwi dollar started consolidating last week after a fresh high on the year at 0.8835. The 4-hour chart shows a very bullish market, but if Janet Yellen is hawkish, we can see some further consolidation and possibly bearish correction. However, unless Yellen is very hawkish, which means she makes a clear market signal that rate hike will come in the first half of the year, unless that happens, we should not expect the US dollar strength to reverse the Kiwi dollar uptrend. We should therefore expect some support around above the 0.8713 support pivot. We should also anticipate the RSI reading to stay above 40. If Janet Yellen instead sounds dovish, then the Kiwi dollar could be ready to continue its strong prevailing bullish uptrend without further consolidation. And if price moves above 0.8835 and the 0.8842 2011 high, we should expect a push towards the 0.90 psychological handle. And that wraps it up for today's Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com, wishing you good trading and safe trading.